So a question we hear a lot about whole life insurance is, what happens if I can't pay my premium? And a lot of times, we assume the worst will happen. Will I lose my policy altogether? Will I be penalized by the insurance company? Will I see my cash value go backwards? Is everything going to go wrong if I can't pay a premium that I originally thought I could? The answer to the question is, you'll usually be fine. There's typically no need to worry. However, there are some rare cases where I could lose the policy altogether. An example of when we would not be fine, where we could lose our money altogether, is if you had just bought a basic life insurance policy, you had very high premiums. When you looked at that illustration, it took a long time to build up any real cash value, and then life happened and you could not pay the premium. So you had a premium due. There is no real cash value in the policy to support that premium. That would be a case where that policy would lapse. That's where we can run into issues if we cannot pay the policy and it can't pay for itself either. Now, if the policy can pay for itself, you're good. And it's very easy to get in this situation. You can do it day one when you start a policy too. So how the policy can pay for itself, there's two ways. One is through the dividends and interest. That's the earnings being produced within the policy. After I've had a policy for several years, typically those earnings can cover my premium and I can see my cash value continue to increase, which is nice. Another option is to have a loan taken to pay the premium. This is a nice way to self-finance my premium in many ways. There's some pros and cons to this, but we typically see this strategy if someone says, hey, I just need some time. I've built up a lot of cash value. My premium came due. I can't pay it right now, but I know I'll be able to in a few years, or maybe even after 1 year. What we might consider in a case like that is to have the policy paid by a loan, and then we can pay that loan back later, and the policy is back to where it would have been as if we would have paid the premium all those years that we had the loan covered anyway. My point is, it's a nice option, assuming we've got cash value in our policy to cover that. Now, if your premium's due and you don't have much in cash value, that's where you can run into a situation, again, where it can lapse. So if I have a $1,000 premium that's due, and I've got $400 in cash value, what's going to happen? $400 won't cover the $1,000 premium. It'll be very difficult for the policy to support that. I might have to come up with a difference out of pocket, otherwise the policy can lapse. Once I get to a point where my cash value is equal to or greater than my premium, I'm usually okay. And if the dividends and interest exceed the premium, I'm in a great position. I'll give you an example of someone who ran into a worst case scenario, but he started things off right. So his name's Frank. He started out with a lump sum of $100,000, and his plan was to fund his policy with $100,000 per year for several years, at least 5 years, but he wanted to get a lot of money into the policy. He had owned his own business. Life happened. What happened is he got $100,000 into the policy in the first year. The second year, he paid about $12,000. Then year 3, he couldn't pay anything. He lost his business, lost his job, was trying to find a new career. Everything that could have gone wrong financially went wrong. That's stressful, isn't it? That can happen. So what happened to Frank's policy? Well, year 1, he started with a lump sum of $100,000. His minimum premium was $10,000. So right out of the gates, he gets a ton of money into the cash value, and he was able to make the premium payment in year 2 as well. So when year 3 rolled around, his premium of about $10,000 came due, but he said, Steve, I can't pay it. I'm thinking about cashing the policy out. He had about $100,000 in cash value. He didn't have to pay anything. What we did was just elect to have the dividends and interest pay the premium for him. His out-of-pocket was 0 that year, so the earnings in the policy covered the premium, and his cash value still went up. Then the next year, so policy year 4, he did the exact same thing. Guess what happened to his cash value? It went up again. Now he's in a position where he's looking at his finances and he's thinking, next year, I think I can at least start to pay the premium again, the minimum of $10,000. But what really saved him and put him in a position where his value continues to increase, even though he's paying nothing, was that first year lump sum. So he started with 100 grand. It doesn't mean you have to start with $100,000. You can do the same thing if I'm starting with $10,000. If I start with $10,000 and my minimum premium is $1,000, it's the same thing Frank did with 100 grand. My minimum is 10% of my total. What I'm doing is stuffing the cash value. So if I start with that 10K, then the next year life happens and I say, I can't even pay the $1,000. What's going to happen to my policy? Will be okay because the policy can easily support that $1,000. So the key, this is exactly what I would do. I would set up a policy where my minimum premium is 10% of the total amount I'm paying in, or the total amount I want to pay in. Frank, he wanted to pay in $100,000 per year. His premium was at 10%, $10,000. If I wanted to pay in a maximum of $10,000 per year, I would set my premium at $1,000. This way, I have a very small premium that likely will be easy for me to continue to pay, but let's say I can't pay it. Well, now the policy only has to support the premium, not the extra payment that I've added. So by keeping my insurance expense to a minimum, that really sets me up nicely. So if life happens and I can't pay anything into the policy can support itself, and I see the cash value continue to grow over time, which is exactly what I want to see. I don't want to feel like this policy is ever a burden. So I hope that this video was helpful. If you'd like to see another video that demonstrates someone running into a life happen scenario, you can check out this video here.